Is this the end of Bitcoin or just the beginning? Bitcoin is at an inflection point right now. It's a very critical time in the economy and in history for an asset like Bitcoin and for assets like cryptocurrencies. So let's take a look at a couple of things and dig into this. I'm going to share my desktop and talk about this. Later on today, I'm going to have a professional technical analyst join me and dig into the charts and talk about the technicals and what we can expect, what we're looking at, and what's really going on with all of this price action that we're seeing everybody's following lately. We have the death cross looming. We have all of the projections and all the pontifications of where the market is going. So one thing is we are clearly still in a downtrend. We still have lower highs, even though we closed on an up candle yesterday, it was still a lower high, right? That was 37. Our last lower high that we have to cross above that's going to be 39. So remember, it's always about the trend. We're still trending down. So until we cross 39, anything that closes under that is still a lower high. And then we had our lower low here at 33,200 plus or minus. You can see we have candles wicking down and around, but that was our last lower low. So what was the low before that? Well, then you had one at 33, then 35, then 36. But what we really need to do for this to gain some momentum to the upside is you got to close above 39, then that becomes your resistance, and then you're moving up from there. But what we've really seen is what's going on here. And like I said, I'm not going to get all technical because I'm an investor. I'm not a technical analyst. I look at the best in the business. If you have been following, I have several interviews with Wyckoff experts. I've got an Elliott Wave expert coming on next week for an interview. So look out for that. I've got another analyst coming on today that's an expert. And these are people that have been trading for 20, 30 years in stocks as well as futures or options in crypto as well. They teach trading. They teach charts and technical analysis. So I am not an expert on technical analysis. I follow the best in the business and I learn from them. And I take different points of views from different markets. This is a macro environment now, and the markets are related. Bitcoin is tracking and is related closely to traditional markets. And I'm going to have another expert on next week to talk about that and how they're related and how they're tracking each other. And just like the altcoin market and how that relates and is tied to Bitcoin. So what you have to understand is it's all about liquidity. So the liquidity is moving throughout the markets. So once you have common liquidity in the markets, in the different assets, they all kind of track each other, and it works in cycles. So anyways, I'm not going to dig too deep into the charts. We're going to have something around 4:30, 5 o'clock today with an expert on the technical analysis that is going to kind of dig into what's going on here. But at the end of the day, we're in a downtrend, and what's going on here is liquidity is being created. And some of this is done intentionally to stop out the longs, stop out the shorts, to buy the positions and sell right back to them, creating liquidity to move price action in the markets. So this behavior, this price action is behavior of the investors, and it could be deliberately done by institutional players. We have more institutional trading desks getting involved, driving price action, creating liquidity. And what we're in is a price discovery. So we are in the phase of price discovery right now. So when you zoom out on this and you look at this from a macro, and I'm going to get into some fundamentals and some fundamentals of Bitcoin fundamentals. So FUD, fear, uncertainty, and doubt. And I also like to call it fear, understanding, and doubt, because what are you afraid of? What you don't understand. And as if you look at the Senate hearings the other day, and some of the senators, Elizabeth Warren, coming out about Bitcoin and cryptocurrencies, and she's just talking about cryptocurrencies and lumping it all together. She doesn't understand it. A lot of those people don't understand it. And what happens is they create fear because people are afraid of what they don't understand. So I call it fear, understanding, and doubt. And but it's also fear, uncertainty, and doubt. Uncertainty and doubt are sort of related, almost the same thing, not quite. Technical definitions are a little bit different, but at the end of the day, what's going on is that we have a revolutionary technology, we have a revolutionary asset, and a lot of people just don't understand it, so they're going to be afraid of it. So what I'm trying to convey today is price, okay, and value. So where we're at right now with all this price action is we're in a discovery phase. This asset is trying to figure out and discover where's the floor and where's the ceiling. And this sideways action that we're having here, again, it's clearly trending down. We are still clearly in a downtrend in the market since the rollover top. Our last high is 58,000. Until we cross and close above 58,000, you can wick above it, but until you close above 58,000, you really can't consider the trend over. So that's what the last position that needs to be breached before you can consider the downtrend over. Now, I'm not saying bear market, I'm not saying bull market, I'm saying trend. I'm an investor. I invest with the trends. I follow the trends. I lead the markets up and down. So I really don't care what people are calling it, bull or bear. I call it a trend. We are in this accumulation, consolidation, whatever you want to call it, phase. For me, it's price discovery. Bitcoin is trying to figure out, how much am I worth at the top? How much am I worth at the bottom? So right now that's between 33 and 39, or you could call it 30 to 39, maybe even 40 with wick up, wick down, which is much lower than a lot of people thought. A lot of people thought it would be in that 40 to 50 range where it was going to try to figure itself out. And we could get a little spring up into that range, and it'll bounce around in there for a while, because again, the idea is to trap investors out on either side of the trade, up, down, long and short. So they want to trap you, liquidate you long, liquidate you short. And not you personally, but the market, investors. And again, these institutional investors, a lot of them are trading against each other because it's an accumulation game to ultimately drive the price to a point that's attractive, that they can now set a base for long-term growth. Because the thing to think about is, where is that ceiling? Where is that floor? And where is it going to be? A lot of people think that we've already seen the bottom of the lows that we hit during this cycle. The problem is we haven't retested that low consistently to really set that in as a bottom. I'm not saying that we have to, but that's traditionally what's going to happen, is you're going to retest that a little bit, get some closing there. And we haven't really broken out to the top side to really say that we're safely off to the races here. And this is a good range for traders, because you're talking about, if we're down around the 30,000 range and closing in that 30 to 32, 33,000 range, I mean, that's a 30% upside to now close at 40, the 40,000 range. That's $9,000. So that's a great little swing trade. And then you have that 39, 40,000 where you've got a 20% markdown to close back down in the low 30s. So that's a good range for larger funds to really have some fun and accumulate some liquidity to ultimately drive price action and test the low end and the high end. And what you need to understand, for this asset to ultimately gain large scale adoption and credibility, it has to be tested on the low of the low. It has to go down to a bottom and be tested to see how far it's going to go before it can be widely adopted as a solid asset that can't be broken. So understand again what I'm saying. Credibility cannot be granted until it's tested to the breaking point. And we haven't gotten to the breaking point yet, where people just completely throw their hands up in the air. They're completely disgusted. They're out. They're never coming back. And then we can be off to the races. But we have not tested Bitcoin to the breaking point yet. And it's Bitcoin. And it's all about investor psychology. So back to the price action that I'm talking about. 65,000 was a peak, and it broke down, and it broke down quick. Okay. So a lot of people look at that and they say, well, if Bitcoin was 65,000 and now we're down in that 33 to 40,000 range, that must be cheap, right? The argument is, if Bitcoin just not even, April was at 60, 90 days ago, whatever that is, was trading at 65,000, and you can now pick it up for $32,000. Well, that's a bargain, right? Not necessarily. Just because it was 65,000 a couple of months ago doesn't mean it's cheap today at 33,000. So that's what you need to understand. And why do I say that? Because if you go back, let's just go back over here to where are we at? April of last year. Let's just go back a year and go back to June of last year. There's July. Where's June? Here we go. So let's go back to June 10th of last year. Bitcoin was at, what is that price, June 10th of last year? about $10,000. Okay. So June of last year, 1 year ago, Bitcoin was at $10,000. So now Bitcoin is at $33,000 or to 30, well, 33 to $40,000. Does that mean it's expensive today because it was $10,000 a year ago? And then let's go back before that to the March low. Now that was an anomaly. Everybody thought the world economically was coming to an end with the pandemic, a lot of uncertainty, but we traded all the way down to $4,800. So that was a year and a half ago. So we're at 36,900 right now as I'm recording this. If it was $4,800 18 months ago and we're at 36,000 today, what does that mean? Does that mean that it was cheap back then and it's expensive now? So you see what I'm saying? So price is relative, and individuals and investors that are sitting here looking at this thing called Bitcoin, their trust and faith in Bitcoin has been broken because it shot all the way up to 65. And we all know why it made it to that point as quickly as it did. It was liquidity and it was leverage. People were over leveraged and speculation drove it up to that point that fast. And what I would say is, if you look at this on a macro scale and you go back, look how parabolic that is. And these little dots are your weekly closes. So, I mean, it was just straight off to the races. There's our March low right there. What I think is, I think Bitcoin was already on a run after the 2018, 2019 downtrend and bear market. I think we had bounced off of the lows in that January of 2020 timeframe, and we were starting the bull market then, and we were heading up before we hit the pandemic sell-off. So I think Bitcoin was already on an uptrend. Then we hit the sell-off, and then the Fed stepped in and pumped all the liquidity in the market. So that's really what's ultimately driven prices to where they are, just like the stock markets, just like gold, just like everything else, real estate. It's all about liquidity in the market. It's all about the Fed, low interest rate environment, quantitative easing, and the ability to borrow money. Look at what Michael Saylor's doing. He's borrowing $500 million through junk bonds to buy Bitcoin. So before the pandemic, that probably wouldn't have been possible, or it definitely wouldn't have been as easy as it is now, because the Fed is forcing money into risk assets. That's what Don't Fight the Fed is all about. It's the low interest rates are forcing money into risk assets. That's one of the reasons Bitcoin has risen to where it did. And now it's tapered off a little bit and it's kind of resting in this place. So the real question is, in an inflationary environment with rates as low as they are and Bitcoin trading where it's trading, what does that really mean ultimately, and where does it go from here? So one of the things to do is understand how the market is made. It's individuals and it's investors. So from an institutional investor standpoint, they're looking for stability, depending on who that investor is. If most institutional investors are looking for income, yield, and stability. So the question is, what are they willing to pay? So if you look at an asset like Bitcoin and you think, well, this thing's just going to be to the moon. Once we get out of here, we're going to bounce. We're going to just race off. We're going to hit 100 grand. And then it's going to be 200, 300, 500 and beyond, which there's some very smart people, some of the smartest investors out there that are projecting $500,000 Bitcoin in 5 to 7 years, maybe 10 years. We ultimately don't know how long it'll take. And this little hiccup here can slow that process down. There's a lot of great analysts out there putting out diminishing return yields of Bitcoin and the life cycle, and that cycle extending, the Bitcoin cycle extending because of diminishing returns in terms of what you're going to get on your investment, your ROI over time. So this right here is not helping that that yield curve, right? So this is going to continue on. This could go on for months and months and months. It could be at this level for a while. It could bounce up a little bit and bounce around for a little while. And we could have some big lows and highs in and that area. But at the same point, as I said before, Bitcoin has to prove itself. It's got to be tested. Its foundation has to be shaken to the core before you know where this asset's ultimately going to be. And that's happening right now. So you have the Senate committee, like I said, coming out, talking about Bitcoin, lumping it all in with all cryptocurrencies. So there's some genuine lack of understanding. There's some genuine uncertainty because of the price volatility of the asset. And then there's just genuine doubt. is this going to be an asset that can survive long term? And is there going to be demand as we move forward, as new technologies are created, as more Bitcoins and equivalents come to the market? Is there still going to be sufficient demand for this asset? And is this just a short-term speculative play? So that is the questions that are out there right now that everybody's asking and everybody's trying to figure out and solve. So one of the things that we can look at is the altcoin market. And you see how altcoins have been up and down. One day they're up, one day they're down, and it's almost all of them across the board. So how does that happen and why does that happen? When you look at Bitcoin, they're kind of tracking and following Bitcoin, but there's one or two in there that may be off track related to everything else. So a lot of liquidity is created throughout these assets as well to ultimately drive into Bitcoin. And if you think about the price of Bitcoin and where we're at when we're on this chart and the uncertainty of it and the desire for institutions to get into this investment, right now, if you're buying in that 30, if you think this is a floor, and if the floor is going to be 30 something thousand to 40, 50,000, and the projections are maybe it gets up to 100,000 for a while, and then it's got to bounce back again, because as it gets to these new highs, it has to be rejected and get, go back down, and you got to have consolidation, then it can break a new high. And it's just kind of the cycle of markets, right? And how long is that going to take? Well, the yields aren't that great. If you're buying in at 30 to 40 to 50,000 and it's going to hit 100,000, well, that's only, doubling your money. Whereas the expectation of Bitcoin to this point and what's attracted investors into the asset now is because they've seen it go from $5,000 to $65,000 when you go back to March of 2020. I mean, that's just insane in terms of the gains. And when you look at these assets and you look at, this is very eye-opening here. When you look at some of these year-to-date gains of some of these assets, look at this. Some of this stuff is, went the other way. Some of this stuff is 19,000%, 18,000%. Look at Matic, 7,800%. Year to date, it's up 7,800%. Dogecoin, 5,700%. We know some of those stories. Solana, 2,100%. And then when you start looking at Bitcoin, let's go back to that main chart here. So Bitcoin right now is up, still up 25% year to date. Ethereum's up 240% year to date. So when you start looking at these yields, what's the real potential of an asset trading at the level of Bitcoin at $36,000? How far can it really go? And what is your yield going to be on an annual basis? And you start looking at some of these coins below it with pretty big market caps in terms of the percentage and the opportunity and the upside represented in those coins. So that's just something to think about when you look at the price point of Bitcoin. Where is it trying to establish itself as a floor and a ceiling? And, again, right now we're probably just in a temporary phase. I've got some great analysts coming on to talk about this more technically. Again, I take a macro look at everything. And this is how I look at investments. I look at something that was once trading at 65, that's now trading at 30, but 18 months ago it was trading at 5, which again, that was a, anomaly. That was a sell-off. So arguably what I base that off of is I say the basis before the bull market going back to January, February of 2020 was around $10,000. So that's where I kind of set the beginning of the bull market phase that we ultimately have now rounded off in 2021. I set that back to early 2020 at $10,000. That's where the bull market, to me, the way I look at things, began. And so now we're tailing off from there. So when you think about fair value of an asset, if that's where it started, again, how do you get down the mountain? The same way you came up. Then there's an argument, and you've heard some people projecting price points in the $9,500 to $10,000 range at some point. I'm not saying that that's where it's going to go. I'm not saying that it can't go there or even lower, because we've seen it do both. We've seen it go from 20-something thousand down to 4,000, and now we've seen it go from 65,000 down to 30. The question is, where does it go from here? How do people feel about the certainty of the value of that asset, and what are people willing to pay? So if it does get to 100,000, who's willing to pay that? If it doesn't, what are people willing to pay? What do they think a fair value is? And what do they think the ultimate return on that's going to be? And how much money are they making just kind of trading in this range right here? And then let's say it goes 30 to 50. That's a huge range. And there's a lot of incentive to keep the asset in that range, because there's a lot more money to be made on a daily basis from 30 to 50 than there is from 30 to 100 over the next year. So think about that. So that could be one of the decisions or one of the things that's factoring into where Bitcoin is, where it stays, and how much price action it has before it ultimately starts trending up, and then where it can end up. Now, adoption is another thing. As we look at news and we look at stories, Bitcoin is in the news, cryptocurrencies are in the news pretty much every day now, between regulatory environment, hackers, and more institutions getting into the game. The Bitcoin ETF, now we're looking at 2020, that before an ETF is likely to be approved for Bitcoin. So there's lots of stories out there about it. Countries adopting Bitcoin as legal tender, meaning they're allowing their citizens to use it and vendors to accept it. And whether or not they're going to require people to use it and accept it, they're not there yet, but they're saying that they can, which means it's easier to bring money into the country from everywhere else in the world. When people leave those countries and they want to send money back to their family, it makes it much easier to do it. El Salvador is the first one. They want to get into mining. And here's a big one right here. So State Street is launching a cryptocurrency division. It's another asset manager, one of the largest out there, the Bank of New York Mellon. State Street is a custody bank that oversees about 40 trillion in assets. So they've launched their own cryptocurrency division. So what does that mean? People will look at this and say, State Street's buying Bitcoin. That's not what that means. What that means is they're putting their division together, which is going to be analysts. It's going to be a trading desk, and it's going to be an advisory. So it doesn't necessarily mean that they're going to take, they're going to own the assets. But if they're going to be custody, then, that means that they're going to handle everything for investors, institutional investors, including pension funds, hedge funds, insurance companies, and sovereign wealth funds, and groups like that. So this is one more step to broad scale institutional adoption, which ultimately can drive price action. So it's going to take time to get these things into place, but every day there's more and more good news on Bitcoin, and there's more and more bad news on Bitcoin. And when I say bad news, I just mean, again, people that just don't understand the asset, not sure where it's going and how to regulate it, how to control it, how to hold it, how it relates to the dollar, where the dollar's place in the whole scheme of things is going to be when that goes digital. And again, that's not going to be any different than what we're dealing with now. It's just going to be a digital currency, so that the central banks of the world do not get outpaced by these alternative assets, and they can keep the people's confidence in the system stable through a digital currency and ease of use. So disincentivize people to use these other currencies, and it gives them a place to go because these other currencies are so volatile. And that's really, at the end of the day, what this is all about. It's about the volatility of the asset. And in order for it to get broad, wide-scale adoption across the board, we have to have more stability in the price of the asset, more predictability of the asset, and a little bit more time in mainstream adoption. So zero hedge is another one. Zero hedge is another one where we're talking about inflation. Inflation is real. The reports came out today, and the Fed and Treasury is still kind of ignoring it and saying that they believe that it's good for the economy, good for the country right now, and that higher interest rates will not be a problem moving forward, and higher inflation is not a problem, and it's only transitory. So the talking points coming out of the Fed and Treasury, because they don't want to have to act, because they know what'll happen if they do have to act, they're kind of denying that it's a long-term problem. So until we get rid of the unemployment benefits, once those expire and we come through the pandemic, everybody's back to work, back open, and the economy's firing again on all cylinders, and they see that prices are not coming down, that they are in fact continuing to go up. And you hear about companies every day, restaurant organizations, hotel chains, apartment rents, housing market, everything's going up. So inflation is real. It's here. The question is it here to stay? And what's the real effect on the economy? What is the effect of the stimulus that's getting ready to get passed? What's the effects on the economy there, and how's that going to affect cryptocurrency? So what you got to understand is they're going to pump $4 trillion into the economy. That money is going to trickle into the crypto markets, but the question is which assets get affected and how. And one of the ways to look at that is to watch this offering of MicroStrategy, Michael Saylor, the $500 million debt raise that he's borrowing to buy Bitcoin. It'll be really interesting to see what price point he is looking to target with that acquisition, when it happens, how it happens, and who else follows suit. So if he's successful with that and creates a good target, then many other people will follow suit and do the same thing. So that's an interesting contemplation. So these are some of the things on a macro level when you talk about, is this the beginning of Bitcoin? Are we early? Or is this potentially the end of the trend of the price action in Bitcoin in terms of the returns that we've seen and the valuations that we've seen over the years? Only time is going to tell. Nobody knows what the real full potential of Bitcoin is, how far it'll go, how low it can go. All we know is right now we seem to have somewhat of a floor, somewhat of a ceiling, and there's going to be bull traps, there's going to be bear traps all along the way to try to trap people on the wrong side of that trade. And until this thing retests and gets shaken down to its foundation, only then can we bounce back up and know where the ultimate long-term future and valuation of this asset's going to be. So those are my thoughts today from a macro standpoint in terms of how I invest, what I'm looking for. I'm looking for this trend to confirm one way or the other. If we get a longer downtrend, then I'm waiting for that bottom for it to round the curve. And then that tells me that's a good acquisition point, and then we can ride up from there. Right now, this is very uncertain territory. I don't have any clear direction other than it is in a downtrend. So that tells me to expect more downside action. Ultimately, we'll get some bounces up and down, but until it breaks that trend, we get some higher lows and some higher highs and higher lows in a consistent basis, and more particularly above this $58,000, $59,000 range. I don't think we have crossed the bridge yet, and I don't think we are on the other side of this mountain yet. So fascinating times. Again, this afternoon, I'm going to have another world-class analyst on that's been doing this stuff for 20-something years, been in crypto for a long time. That's going to take us through the charts, get a little bit more detailed on price action on the weekly, daily, hourly, what to look for. He teaches this stuff, and it's one of the people that I follow in terms of making ultimate decisions on my investments. But this is how I look at it. This is a whole macro view, taking into the fundamentals, the trends, the good news, the bad news. I listen to all sides, all opinions, and that's the only way you can do it. To think that you have the answers or that you know, even with all that I study and everything I learned, I can't tell you for certain that Bitcoin will hit 100,000. I can't tell you for certain that it's going to hit 10,000. What I can tell you is anything and everything is possible. And it's very interesting times, fascinating times. We know that we are going to see more and more broad scale adoption. We know that we're going to see more and more regulation. And we do know that we're going to see more challenges in the future before things are settled in, and we know whether this is truly the beginning and we really are early, or if this is the end and we are not so early. So those are my thoughts for today. I will see you on the next video with some serious technical analysis. And then, like I said, I have another analyst coming on next week that's going to talk more about how the markets and Bitcoin are related and how they interact together, and track the price action across both of those with some charts to kind of show the relationship between the two. And then I've got an Elliott wave expert coming on. For those of you that like the Elliott wave theory of investing, I'll have somebody on to kind of talk about that, teach that, and show where we're at with Bitcoin and what the Elliott wave theory says about Bitcoin. So I will see you on the next video.